All right, so I don't get an opportunity to introduce all the panels. Obviously, we have something like 90 panels at the World Stem Cell Summit, and including the RegMed Capital Conference, but I just had to step into this particular room where we had Steve Brozak and Henry McCusker, because one of the great pleasures in putting together this meeting and having worked in this field for 11 years, I know a lot of the players, the speakers, and the characters. And it's sort of like a fish tank, right? Sometimes it's a community fish tank. You got to be careful which fish you put together in the same tank. Well, this is a particular panel that, where you have a couple of, I won't call them piranhas, but very colorful fish in the investor field, which is Henry and Steve. I like to call Henry one of the great curmudgeons of our field. And I don't know what's going to actually happen or be said in this panel. Just remember, fellas, that it's being recorded and some others might listen to it. And certainly the Genetics Policy Institute doesn't want to get sued for anything that you say. Now, Henry, by the way, doesn't necessarily win popularity contests amongst all of industry. I just need to know you to do that. But the insights that I think you will get as a potential investor or a savvy investor in this field are unsurpassed by the two gentlemen that are going to be here presenting to you now. So I'm going to introduce first my friend Henry McCusker. Thank you.
Why we always stand next to Bernie is because he's a lawyer. A defense lawyer in case we need him. Curmudgeon is a good term. I tend to use or like contrarian because it's always better to define the worst of a situation so that you can always view the next side of the potential of these situations. Hold on. Okay,
No.
sound better. Anyway, the title of what we're speaking about today is understanding the risk and rewards in the RegMed sector. But part of understanding the sort of risk and reward is you need to sort of break down the quote-unquote RegMed sector, or the moniker that it is associated with, into a couple of different subsets in my book. And Stephen and I go through this quite a bit. There is the stem cell component, okay, of what's, then you need to differentiate into the sort of cell therapy sort of companies. Then you have the immuno-oncology companies. Then you have the gene therapy companies, okay? And then you had the regenerative medicine, of where you have the regeneration or the development of organs and substitutes on that side. So basically, RegMed can be a misnomer on that side of it. One of the things I constantly say, and I write a whole lot of things like every morning and in a wrap-up and in the evening, as well as some pieces during the day of who, what's happening, what is the pricing mechanism to things, sort of what I'm known for. So I don't make always a lot of friends, but I've actually lately have been quite right on a number of where things are and essentially where they are going. And that's something I think people should have or have knowledge of. But again, in my book, investors signed up for a better world. We've looked at these companies, we started pretty high, everything was hot, full of hope, everything else, and we've sort of, pardon the expression, sort of degenerated into a sort of morass of companies that are just going where, from the financial side, you might be doing well on the technical in the development side, but many times that message is not specifically coming across. Thus, there's a perception problem. There's a reality to what is happening to development platforms when you see an event, I call them an event orientation of a company that has a great platform. The next thing you know, they're partnered with a major farmer. Then that goes away. They're partnered with another major company, and suddenly that goes away. And then there's the condition that we will or hope to be partnering soon with another company, yet that has not appeared to any of us quite yet. So we have these sort of issues, and then we have the secondary issue of these declining share pricings. I mean, how many of these companies within the 43 that I look at within that component of RegMed, okay, are trading under $1? I mean, you got 4 or 5 of them. And it's like, funds cannot invest in that side of it. You've got to be about, at least $5 for credible investment or institutional funds to invest. So many times these companies are relegated to the day traders, to the speculators, to those who sort of play back and forth. They drive up the volume, they drive down the volume, they drive up the price, they drive down the price, and then the ultimate issue comes in, the algorithmic programs hit, and the next thing they're all in the toilet on some of these matters. Okay, so those are the things I tend to look at. And people do call me a dissenter who might predict the worst, but I also am a firm believer. I consider it our universe of where we want to be, where the hope is to the future of a lot of these companies. And Stephen, I talk to every day, will agree. But again, there are conditions or there are flavors to the support that companies need. And the whole issue in many cases comes down to, and I'm doing a little stream of consciousness here, is the fact that you as companies or you as individuals, you're going to need to understand the issue of clarity. What is needed? Okay, there is a presumption of hope, there's presumption of guilt, okay? Having been trained by other people, I worked for the government for a lot of years before I got a real job. But there was always, I always believed in one thing, the facts in evidence. Never a lawyer, it was kind of boring. But what are the facts that are in evidence out there right now? And that contributes to the issues of perception. And, there are companies that just get the wrong perception because they have the wrong people in the wrong places, okay, who don't communicate effectively. There are times, don't depend on some of these PR firms. I mean, they just don't get it right. Or don't depend on the lawyers told me I can't say this in this sort of fashion. Well, who's running this ship? Okay? Not the lawyers. I had a company the other day and I issued a press release. And they just did a partnership or collaboration with an English firm, which was private. And I read through the review and said, God, this is crap. And so I sort of did a little research on my own because I sort of wrote a sort of article about it that morning and said, this is what's really happening and why this deal was done. And it was about expanding the gene expression. But how many other people had done the research beforehand? They just put out this crap and it wasn't explained. The stock dropped $1.15. Nobody got it. I got a few phone calls late at night. I'm headed down here. It's like a couple of fund managers are calling me, who I deal with a lot. Actually, one's a Fidelity fund manager. What do you think of this stuff? I said, they got it wrong. But the next thing you knew, the stock was up 48 cents. Okay, so by communicating effectively and providing a hair more clarity by the contrarian, okay, we were able to work and get that sort of thing up, i.e. the price. So not always am I a dissenter who predicts the worst on that side of it. Stephen's also always tempering me on some of the things I have to say on that side of it. But too much, as I said earlier, too much has been lumped or dumped into the sort of moniker of RegMed. And I firmly believe that some of us need to have the courage, as I might say, to go against what some companies are saying if we're looking at the pricing metric. Okay, and against consensus, when you listen to some of these analysts, who I read the report, and, it's, the stock is trading at $1.02, as a price target of $6. I said, in which century is that going to happen on that basis? And they, they're trying to validate or justify their roles. I'm like, doesn't float my boat. But it's the question of how one can justify the analysis from my side of it. And that's why I tend to write what I write. In 30 days, I put out maybe 10 things a day. It's not that morning piece to say, what could happen? Okay, and sort of looking at the European markets, I'm still one of those guys who gets up at 4:30 in the morning for some goddamn reason. But I have this thing that goes out at 6:35 every morning. And it sort of progresses. I haven't been grossly wrong. I've actually been pretty right lately, which is good. Then I do a wrap-up piece at the end of the day. Well, who did well? Who played musical chairs of pricing and what's really been going on? And it seems to resonate from a lot of people. God, I think last month I was sort of trying to justify my existence to Stephen, but which I'm constantly trying to do as a friend. But I have 11,000 people read it 1 month. Okay, which says something, that people want to know something. There are a lot of us who have been in this market, and yes, it is a great thing to look at the long position. Yes, the days of buy and hold are gone. And even the funds are beginning to recognize more specifically that the short-term opportunity is to where you can make the money. Unfortunately, you have to put a lot of time and effort into understanding what's going on in the volume and the volatility and the trading range and who has said what, or what pundit, like we might criticize an AF sort of individual of the street.com or something, but everyone has their vantage of viewpoints. And again, if you listen to the majority and you drop it down into a smaller partition, as I might call it, you will understand that there are fundamentals in play. And one of the things I do believe in, having been trained for certain things, is pattern analysis. Not always will a pattern give you a full picture, but it'll give you a beginning to understand what is happening. Because at that point, there's a probability of, if you understand the pattern, there's a probability of which way the stock share or share price might go, which is what I like to play with. And if you understand those sort of little pieces, there's a predictable index there. You can pretty well play through it and understand. So I've looked lately to say that short-term playing in the market is more opportunistic to our individual portfolios, which is what I write about and invest in on that basis. But as I hear from the different funds that read and contact me and use me and whatever, of value, the crazy things I might have to say, even they are now looking at the issues of sort of evaluating or reevaluating their long-standing aversion to short-term plays. Okay, I mean they're trading more, and they're moving more, and they're sort of participating on that side of it. And then we have the issues of who's investing. I mean, who is investing? I mean, I'd be scared to hell as an individual investor to buy into something when hedge funds are exiting. I mean, where the traders are playing, there are pumpers and they're trying to pump up a stock. And the next thing you know, the algorithmic programs jump in and crash everybody. So the thing is, you reach a point where you've got to say, where do I stand? what should I do, how should I do it? It's something I try to write about and to look at things. But, the hedge funds are getting creamed, okay? The institutional funds are just saying, guys, I don't know what to do. And I hear from quite a few of them. A lot of times they call up, they just want to gossip. But about 6 minutes into the conversation, you have a critical question of what do you really think, Henry, on something? And you have to just sort of pick your words, I believe, correctly in some of these companies. I look at their friends in the audience, I look at some of these companies, and there's real hope there. But sometimes they're, pardon the expression, they're requalifying their position. They're reconditioning their development platform. And that's what a lot of companies need to do. They gotta go back to validating what they thought was their original proof of concept. And I value those individuals who will step up and say, let me just clear the deck and say, what do I really have? What do I want to do with it? And how can I make it sell? Or how can I make it better on that side of it? With those few things, I probably said a little too much, a little whatever, but it's better to speak your mind if you're going to do something. And now basically we'll introduce the more studious Steve Brozak.
Thank you. Can you all hear me? Okay. Could I know your audience here? Get a show of hands. How many folks are running companies or with biotech companies? 1, 2. How about fund managers or anybody? Okay. Why are most of you here? I'm not going to pick on you, ma'am, but yeah.
Well, we have products that we would like to be
Products, okay. All right. Before I flew down here, I checked with StarMine. It's a ranking system that basically goes over all the analysts. And cut to the chase, I basically said, just give me the plain vanilla pharmaceutical industry index, of which are about 50 ranked analysts. That means that, from A to Z, all the analysts put in their recommendations, their earnings, and everything else. And at the end of the day, December 31st, they give you a ranking of 1 through, let's say, 50 or 55. And I'm not going to tell you who's number 1, because obviously I'm trying to get there, but I can tell you that if you go down past number 12, it's negative returns. So, as fund managers I talked to throughout my career have said, I don't need you to lose me money. I can do it all by myself, okay? I don't have to pay for the extra fees. And, I'm not a really personable kind of person, so it's not like, they really enjoy picking up the phone. So at the end of the day, you have to say to yourself, okay, for the last 5 years, for all intents and purposes, most of the pharmaceutical biotech have been indexers. And what they've been looking at are things like Pfizer, Merck, Lilly, J&J. Are they in the regenerative medicine space? Yeah, right. What do they have? They have 3, 4, 5% interest dividends that pretty much have made investors look at them and say, well, let me get this straight. Everyone's getting older, sicker, and the whole 9 yards, so let me just invest in this field. And at the end of the day, instead of getting a negative rate on my T-bill or my note or bond, I'm going to get a dividend, and I'm going to get capital appreciation. So what we've started to see is we've seen people that have no business investing in healthcare go into this field as a surrogate, not for another type of investment, but candidly as a yield surrogate, which I don't know if you guys are going to see this movie, The Big Short, but it describes pretty much what happens when people start to go after fake yield and try and say, listen, it's being issued by somebody and, you watch it on TV. But on a positive note, I can tell you that, it's unusual not to see something that's kind of interesting. I'm going to go back 33 years. How many here remember a company called Centocor? They had one product, Centoxin. Show of hands, 1, 2, 3, 4, 5. It's about, okay. They had a product, Centoxin, which was to be used for sepsis. And back then, they would go abroad and the individual researchers would pretty much publish whatever they were going to publish with no constraints by the sponsor, in this case, Centocor. And I remember getting a publication for some French doctors, that pretty much said that a sharp stick in the eye was better than the Centoxin, and someone had leaked the data to the pricing data to the French researchers, and they basically said, and it's also outrageous that they're going to come out with a price that is ridiculous. 33 years, we're still talking about both, right? So back then, I wasn't an analyst, but I did manage money. And I remember saying, my God, this is like black and white. They're saying it doesn't work, and it's egregious in terms of the price. My ex-wife, a doctor, her father had entrusted me some funds, so it was my father-in-law. And I'm saying, you know, I really want to knock the ball out of the park with this investment, so I bought some put options. And I expected the markets to react the way they were supposed to react, right? Well, guess what? I'm looking at a position that's expiring on Friday where I will have lost him, and back then it was a lot of money, 25 grand, okay? I'm going to myself, you know, I can't believe it. How could I be so wrong? All of a sudden, and this was back in the old days when they'd had CNBC on it, and they had this broadcaster, and he went out there and he started to say how Centocor is going to have a failure. And I'm going, you know, it's like, holy mackerel. And all of a sudden they're closing the stock, and all of a sudden now it's a race. How quickly can I close down this position? And back then, you know, they didn't have all of this, how should I put it? They did have some trading faculties, but in this case, it was the old ticket. And I literally put in the ticket thinking, you know, stupid me, I'll get a market order. Well, never works out like that. You never buy at the low or sell at the high. But sure enough, I made him 100 grand in one trade, which back then, again, was a lot of money. So I'm looking at it going, okay, things take time. Now, let's see, 5 years later, Centocor is still fooling around with monoclonal antibodies. And what's going on? The industry is looking for things. They're looking for things to shut down mechanisms, and specifically anti-TNF. And unbeknownst to me, there's two researchers, or actually one clinician and a researcher, at Imperial College in London. And they're negotiating with a company called Celtec, now UCB Celtec. And they want to get some of their MAB to basically stop the influence of arthritis. So they negotiate. They negotiate. Business development people waste their time, literally. They burn a year and a half, okay? So there's a man named Woody Johnson over at Centocor, and it happens to be that these folks, Sir Ravindra Maini and Sir Mark Feldman, they're both sirs now. They won the Lasker a couple years back, so I guess if they live long enough, they'll win the Nobels. They know him and say, can you ship us some bootleg MAB? And at the end of the day, they do. What happens? They all of a sudden start to see results that are spectacular. Literally, joints that are literally, going back to use. They start to see things that they would never have expected. So all of a sudden they go back to Woody, and now Johnson & Johnson has bought or is in the process of buying Centocor, so they can't do any bootleg, operations. And at the end of the day, they say we would like to have, more, and we think there's a product here. Well, the bean counters at J&J basically understand the p-values. They say the test isn't large enough. And they say, how many patients do you need? And they basically, north of 100. So, excuse me. Choking on my own words here. So, at the end of the day, they go back to the UK and 100 patients. Okay, now this is what they find. You have people that have been in wheelchairs for 10 years, walking. It literally is like, my God, this is it. And they're slapping each other on the back as they're flying, economy back from London to New York, expecting these people are really gonna, it's gonna be great. It's like, hey, listen, we've solved a disaster. So the marketing people, all 20 of them, are on the other side of the J&J table because J&J now owns Centocor. And they say to them, well, we happen to think you're probably right. This is a product. However, we've done a global analysis of all of the arthritis products out there, and the sum total in the globe for sales is $400 million. We don't believe there's a market there. And they're looking at each other going, well, that's pretty much because you just counted aspirin sales, and the stuff will burn a hole in your stomach so it doesn't work. And they say, well, all right, we may be wrong, go figure. But, there's probably $10 million worth of sunk costs in here. So if you want to pay us $10 million, you can have all the rights to this anti-TNF package in its entirety. So they go to Pfizer. Pfizer says, not only do we not think it's, basically ever going to sell, but, for all intents and purposes, we have other interests and things, and, it's sort of like, okay, you guys just don't get it. Finally, J&J cuts a deal here, cuts a deal there. What is the yearly anti-TNF market sales today? Does anyone have a guess? For arthritis, for inflammation? $25 billion and growing annually. Now, I don't want you to think this is a sad story. I remember these guys when they were just poor millionaires, but they didn't do it for the money. They did it because they really wanted to go out there and achieve something. And Sir Ravindra Tiny is from India, and he's often commented how the price of the product for where he came from is too high for the patients in need. So it's one of these situations where now you're looking at, okay, it's like that broken watch. It's right twice a day. And I continuously see this. I could tell you example after example after example. Now, on the slide deck here, and I couldn't help resist when I knew we were coming to Atlanta. I figured I'd put Atlanta burning. On the slide deck afterwards, though, there's a picture of modern-day Atlanta, and obviously it was built up from the ashes of Atlanta during the Civil War. And I'm looking at it now, for all intents and purposes, I can listen to, and I have to listen to, 50 presentations. And you listen to 50 presentations, and you can become pretty damn cynical. And, after a while, you start to say to yourself, I feel like I've got that lantern, and I'm just looking. But I hear somebody say something, and then all of a sudden, you start to say, okay, the same way Tiny Maney and Mark Feldman went out and said, if we use this product in this way, what will happen? And today, I can tell you that I actually did see one company, can't tell you which, but I did see one company that I said, okay, there is a path to discovering something. But I'll also tell you this, it's not going to be cheap. And anybody that thinks they can get through FDA and just go out there and say, okay, we'll take a meeting and we'll do this, and it's like, yeah, right. I covered Geron and did the initial public offering, and their first filing in the stem cell space was 20,000 pages. 20,000 pages. Literally, when they got the documents back, it was like, a warehouse, because they have to make copies and they have to do everything else, and it's like, now, of course, all this stuff has been transferred over to Biotime, now Asterios, and they didn't pay anything for it other than the fact that they had to put in capital to continue the prosecution. I believe that there are some companies that are legitimate that do have programs out there. But typically, you'll find some kind of cruel trick in that, the people that are running it are like, they don't always get it, and or that, it's one of these situations where they run out of money, or frankly, people just lose faith, and at the end of the day, they just have to stop. For those of you that are running the companies, frankly, as my economics professor at B School taught me, the quick buck goes to the person that's really the less ethical. But he did it in a wonderful Austrian accent, so it made it sound like he knew what he was talking about. But anybody that can basically go and understand living in New York City, there are tons of quick buck artists out there. The idea, though, is this, that it has been now since, let's say, we're talking about 20 years since the Geron filing, probably another 5. So we're talking about a quarter century where people have started to get their hands around this technology. I'm starting to finally see some things that may not be seismic in their individual application. However, in the aggregate, they open the door for a lot of other things. The greatest difficulty, though, is this. When you talk about a dollar stock, if I were to call up any of the PMs that I know, portfolio managers I know, and tell them I wanted them to buy a dollar stock, They basically said, what, in my IRA, these people can't buy. Fidelity, T. Rowe, they can't buy in these companies unless it's an index. So at the time when they need the funds the most, their access to the public markets in that direct fashion is the hardest. What it leaves you with is this, that someone will make a lot of money in this space. I think it will be in the next few years that we'll start to see a delineation of products, we'll start to see a delineation of approaches. I just don't know what it's going to be in, but it'll probably be, if experience is any teacher, someone that goes out there, finds a result that is counterintuitive, but has the intellectual curiosity to pursue that result, to find out why it was counterintuitive, and then go down that path and say, not we need this drug to reduce male pattern baldness or erectile dysfunction, but we now see something that goes out there and deals with some kind of a cardiac indication where we were looking for something completely different. Frankly, the lower hanging fruit is probably the one that's easiest, because obviously when you talk cardiac, when you talk anything in the major fields, it's prohibitive in terms of the R&D, prohibitive in terms of the filings required by FDA. But it doesn't mean that you should not maintain hope. Questions? Sure.
So, when I first got involved in this field as an advocate, of course, back in 2000, 2004, they were talking, oh, when will you be able to get these cells as medicine? Oh, about 5 years. And someone outside the field, 13 years of experience as an advocate, it's like peeling an onion, right? And it seems like more like 30 years.
They were right. It's dog years. You didn't listen correctly.
So what's interesting to me in this space, there are a lot of companies that are cell therapists at this stage, developed a proprietary interest in a certain type of cell. And there might be some early indications of success. They're going through their first clinical trials. These are public companies. They don't have a reimbursement plan yet in place. They have to navigate the regulatory system and then pay for these clinical trials. Yet, all right, they might have a $40 million market cap, $100 million market cap. They're still public companies. But I don't see the pathway for a lot of these companies. I support them. I want them to succeed. How do they get there? And how do people invest in these companies? What's the story here?
Okay. Well, as I was reminded by one of the leaders in the industry that, has his own compound, Amgen was once upon a time a dollar stock. Okay, so, but those times are long gone. What I would probably say is that for an individual that isn't trained, and I really do mean trained in not just the science side of it, but also the capital markets, that it would probably be reckless for an individual like that to directly invest in any type of program like this. There's just no way you can go out there and be in a position to say, okay, I know more than the capital markets. It's just a sad truth. What I do think now is that we're starting to see sovereign investments, i.e. the Japanese coming in. Now, excuse me, when you see the Japanese coming in, as we had before the Fujifilm speaker, now all of a sudden you've got a different level of investor. And the irony is there. They've got too much money. They can't go out there and really invest in what needs to be invested, because, if you have $1 billion to spend and the company only needs 10 million, it just doesn't even move the needle a little bit. So at the end of the day, you have this dichotomy that is plaguing the system. And did I forget to tell you that we're talking about drug price controls, we're talking about orphan indications, we're talking about all of this stuff that basically is muddying the waters for everything else. I like to think I'm a good analyst. My wife doesn't think I'm that good at picking things out, but after a while, I start to say to myself, okay, here are trends that you can look at for the long term and say, you know, is it 5 years? Is it 30 years? You know, when 10 years ago, I'm sorry, 5 years ago, Nature asked me to write about what would happen with the fact that the U.S. was now coming back and starting to do unfettered stem cell research. And I said it's going to be problematic because you can't go from 30 miles an hour to 0, then from 0 to 50 overnight. I thought it would take about 5 years. So I wrote a piece talking about how we were going to get left behind. I've never written a piece that I thought was so accurate where I had no idea what the heck I was writing at the time I was writing it. It's one of those things where you say to yourself, okay, I think this is probably what's going to happen. But we'll see. In 5 years, if I write a piece again for Nature, you know, and unlike a lot of other publications, these people want something in 24 hours. You know, 25 hours after that, you better deliver it. So that's all there is to it. I'm not going to speak more than Henry because, frankly, it's just about impossible. So if there are any questions you want to ask, I'm going to grab a seat and happy to talk about them.
I have a few comments, just so then we can sort of open it up a little bit more. I also believe do believe there is value in our universe. And I repeat, there's our universe, okay? Unfortunately, in many cases, is not as realized. One of the issues, go back to, that I mentioned before, is perception, okay, of what is transpiring. And companies have not done a good job in as far as clarifying where they stand, what they're doing, why they're doing it, and what is the end result. So to me, there's an issue of clarity. Okay, there are all kinds of sub-issues that might contribute to that, but essentially, you know, investors need a better sense if they're even going to consider, because those are the people who will buy, since we've talked about the funds can't, this one can but can't, the hedge funds are getting hammered, so they're not, all they're doing is dumping. But again, it comes down to investors, whoever they might be, need a better sense of where you are going, what you are spending, and why you are doing this. I was going through something with a company, and he said, "How did the slides look?" And I said, "Actually, they're a hell of a lot better than they were." But I said, you know, one little thing that I really like that a lot of people haven't come into, or sort of defined. What is the occurrence of this issue? How many people are affected by this issue? Is that number growing? Okay? How do you intend to participate in that market over time? Which is, again, it lends another element of credibility to what you're trying to do, hoping to do, and at the end will potentially accomplish. Anyway, we're going to open it up to some questions. Hey, like I said, we were doing a bit of stream of consciousness on that side of it, so Stephen, get a sip now. So whatever you guys would like to participate in or ask, we're open book.
Okay. 20-year-old medicine like anti-TNF or 60-year-old medicine like Daraprim can be controlled and we can raise the price of these old medicines and almost assure short-term profit for the investors. So the question to you guys is, why would an investor invest in our universe, if you will, rather than the profit of cornering a Daraprim or anti-VEGF antibody market and raising the price, doubling the price? And just one fact, and I use a lot of Pfizer products, so you've mentioned them. They won't come after us. Well, I've watched these prices go from $1.38 for certain medicines like erythromycin, where I would buy it to give out so the patients didn't have to pay $50 copays for their $1.38 medicine. And the price of that stuff is now 120 some odd dollars for the little tube of 80-year-old medicine.
Well, hasn't this been on the front page of the paper most recently with a number of surreptitious characters?
Or Pfizer's and Novartis and
Yes, but at the same time,
and-
they haven't brought up the Pfizer's as a time, many a time,
hey, Henry?
in the other sort of companies. Stephen?
Yeah, yeah, well, I mean, come on. You go where the money is, whether it's banks or pharmaceuticals. It's funny you mention, what we're talking about here, because last week I was at the Forbes conference. And, you had, of course, you had Martin Shkreli in his hoodie. The tape is available.
I'm glad you brought it up.
His name, he basically said, what did he think? And at the end of the day, his statement was, I didn't price it high enough. Some shock value there, but skip him. Ken Frazier, who sits at the head of pharma, basically said repeatedly, he's not one of us. And having breakfast with Ken that morning, he understands that, that statement that I told you about my business school economics teacher basically said, look, there's two kinds of greed. There's short-term and long-term. Long-term greed is you go out there and you make a reasonable amount of money for the rest of your life, build something, and you have a legacy. Short-term is you do whatever the heck you want until they throw your keister on the sidewalk, and that's the end of it. At some point, the only question I really have is, when do you start to see the sense of outrage? When do you start to see the restraining steps being put in? Well, here's what I'm thinking. Everybody here remembers the outrage, the hostility, the anger around HIV drugs. It was one of those things where if it hadn't been, literally, for people protesting in front of FDA, we wouldn't have seen a lot of these expedited changes. Wouldn't have happened. And at the end of the day, it succeeded. Not just for HIV drugs, but for other meds as well. The anti-angiogenesis drugs came in because FDA was willing to go out there and take unusual steps. And I was firsthand watching how that went through, and frankly, nobody could have predicted that at all. So you look at that and you say, where is this sense of outrage? Where is the sense of that this must be changed? And I don't want to hear about, free markets and capitalism, because free markets and capitalism are friends of mine, and they don't exist right now, okay? That's really not what we're looking at. What we're looking at are, in a lot of cases, monopolistic behavior, where it's being left unchecked and fed, candidly, by some bankers and some hedge funds and some hedge fund investors that really had better start to think about what they want to do in the long term. Because as I told one hedge fund investor, you mentioned erythromycin, how the heck old is that drug? And I was saying to him, we need a next generation antibiotic. And he said, well, I'm a John Deere kind of guy. I want revenue. And I was like, oh, so let me get this straight. You're immune to bacteria. Is that what you're telling me? Because if you don't get something new by the time this decade is out, well, we're going to be talking about going back to the bad old days. And at that point, he said, all right, how much is it going to cost me? That's the kind of approach. Again, you think common sense is always there, but it simply isn't.
What is this? You're going to need agitation in order to change this?
Well, it sometimes works, but let me just go back to another analogy comparable to what Stephen has said. I worked on an HIV drug in 1991 at NYU, okay? And we worked. There's serious issues. We worked with Boris Wellcome and became this sort of combinatorial cocktail approach. But if I had some apartment on West 75th Street, I had the people from ACT UP outside the house carrying, well, the apartment on the 5th floor, carrying signs. They were checking the dumpsters, and they were just, I could get 100 pages of faxes a day. That outrage forced a lot of people to do something. And there are times you need that outrage. I mean, not against the individuals that we have mentioned or against some of these larger firms, but unless they make a profit, okay, I'm say whatever level of profit, they're not going to do something. And you're in business to make a profit. You're in business to advance the science, but you need to make a buck to keep it going, to keep somebody investing, it's sort of like a rolling ball downhill in many cases.
Same question. So they want to make a profit. It's much easier to double they want to make a profit, granted. It's much easier to double the price of E-mycin. The risk there is minimal if you control that marketplace than to invest in a stem cell that might take 5 years to find out whether or not it's going to work. And so how do we get the investor to invest in that stem cell? I hear the Bernie's interpretation of your answer, but coming back to the way you phrase this, they need a profit. So where should we target?
I'm gonna go out there and, do you know who the single worst fund managers are or advisors are in terms of telling me about drugs and development of drugs and such?
New York Fed market desk.
Doctors, MDs, practicing MDs. Because usually they'll say, well, this is good enough, and we've been using this. You can tell exactly how old someone is by, specifically what was commonplace in their residencies. So, the older you get, now there are some, of course I'm generalizing, but there are some, unusual characters. But for all intents and purposes, I can pretty much figure out, what is going to happen as far as the reception of something, unless there are exceptions, of course. Gilead's, Sovaldi, you had ID docs that were warehousing patients waiting for a cure. So in that particular case, that's the exception. But for all intents and purposes, they don't want to change something. If it isn't broke, don't fix it, which is problematic. The other part is when doctors start to tell me, well, the rate of return on this investment is going to be this. It's like, that's when I really put my hand on my wall and say, okay, I didn't ask you about, rates of return. That's my job in theory. I asked you about what the receptivity would be and the efficacy of this particular drug is going to be. So at the end of the day, I'm very, very leery. And I have a staff of really good-hearted physicians, and they'll basically come out and say, okay, this is my best opinion, and for all intents and purposes, they're usually pretty right. However, there's this book, you should all read it. This one I guarantee you. It's called The Remedy. It's by a guy named Getz out on the West Coast. And he wrote about the work that Koch, Sir Arthur Conan Doyle, and Louis Pasteur all did. They were all contemporaries. They were all looking for cures, and they were all battling about TB. And what the essence of it was it would take roughly 11 years from the time something is accepted as standard of care by the thought leaders to actually become standard of care. And then one of the guys that runs NIAID said to me, yeah, but it takes twice as long to get something out of the system that basically is standard of care that doesn't work. So you go figure. It's like one of these really dichotomies that you say to yourself, okay, pardon? I could stack up the lawyers too and go from there.
Don't blame the lawyers.
Lawyers, okay, I'll tell you, the law firms we use, frankly, they work on the weekends. And they'll also say, do you, what is this going to be, a Form A, a Form B, a Form C, or is this like really heavy lifting? And I'll say, Form B, don't kill yourself, and we'll just do it this way. And then on others, I'll say, you better read every single sentence, and I don't want to see double negatives, popping out left and right. The other thing for all you small biotech companies is I have never seen the term sheets being proffered today with, the death spiral packages that are on there. It's like, I've seen, in some cases, I've seen this stuff individually. I've never just seen a one contract, okay? It's like, I tell the CEO, you sign this, you might as well just give them the keys. It'll cut down the time you're wasting, because no matter, they'll make more money if you go out of business than if you actually succeed. And it's hard to explain that to people. They think, okay, I'll live to fight another day. But if you don't have a good grasp of the capital markets and understand who actually, forget about investing in you, because that's more of a push, but if you don't understand what they can do to your stock, well, then you should not be in this business, not at all, because you're going to make it 10 times more difficult for the person that's following you up after you. And that's a reality. And I'd say that the cousin to the people that are pushing, these off-patent, off-label uses are one that they're not investors. They're just people that go out there and they can actually quantify returns based on de minimis investments where they're guaranteed to be made whole, and that's the farthest thing removed from real investing.
So,
If you think of a little bit about talking about reading books, I read a lot of books as well, but it's interesting rereading, going back to something called The Billion-Dollar Molecule about Josh Boger and Vertex. Well, actually, Josh was a friend of mine. But reading the subsequent book by the same author, whose name I truly forget, I'm getting old, but called The Antidote, which goes to the next iteration or generation of good. But it shows the lengths that people went to, the trials and the tribulations and the issues to get all these sort of things approved. And it's again, something you should know or read through, because history's been written. You're just revisiting it at this point in time. Anyway, another question.
so
No,
Henry,
it's just an ad lib.
I'm really enjoying this. I can't sit through many sessions, but this one I'm really enjoying, so.
It's Stephen's influence always.
So bear with me. But you made a comment that really surprised me, that related to advocacy. You were talking about the ACT UP, the HIV AIDS movement, which is something I talk about a lot, the different movements and tactics that can move the regulatory needle. But how you were using it, I was surprised that it came from this session, is that you were referring to it, and it made me think that the bottleneck that you're talking about wasn't a regulatory bottleneck. It's actually a bottleneck from our funders, our hedge funds, the financiers of this moving forward. And I guess I'm a little confused. We're not going to agitate against that.
I'll give you the first example.
Are we?
No, okay. And we should actually. We really should. Celgene. How many people don't know of it? Okay. I took them public back in 1986 when I was at Dean Witter. They didn't do anything until 1998, when they were the 13th company, lucky 13. This is a little bit of fudge here, plus minus, that was approached with thalidomide. Why? Because the AIDS community basically said that they wanted this drug. It had the potential to shut down AIDS cachexia. And it was like, FDA was terrified that bootleg was being brought up from Brazil. So, the former chairman, CEO, joked around with me about how the minute he announced it, they went from having 2 analysts covering them to having 1. Then I came on board and they had 2 again. So I, used to joke around. I increased them again, by 100% in terms of coverage. But it was one of these things where anybody remembers that time. For the first 5 years, the only indication thalidomide was approved for was Hansen's disease. It wasn't approved for multiple myeloma. But they made extraordinary steps to ensuring that it couldn't get out of that community. They started a STEPS program. And unlike a lot of other companies that said, well, we'll just keep making this, they went into a 2nd and a 3rd generation product right from the get-go. The 2nd generation product didn't really work that well, but the 3rd one was Revlimid. And they actually understood that it was terribly important to go out there and make changes. I mean, in this industry, if you have a blockbuster, until there's some patent issues, how often are you going to change it? If you basically buy a car, next year's model is going to have 15 new bells and whistles. It's not healthcare's problem, it's the mentality that you're seeing from a lot of these developers that are saying, don't touch it. If you touch it, you may put our franchise in jeopardy. And that's why, on the activist side, if I were one of these folks, that basically was faced with an impossible decision between, myself or my family, kids, I probably would start to go out there and say, what are we building here? What kind of ethos are we going out there and advocating for? We now need to understand that, again, I believe in revenue. Absolutely. I believe in funding. I believe in all that. But at the same time, the fund managers have to understand now that, one of them said to me something, Steve, you're a great guy, you made me a ton of money. We got a ton of money here, we're swimming in it, but I need 3 things. 1, I need to be able to invest $50 million, okay? 2, I need to get 10x on my return. Well, it's not a guarantee, but okay. And 3, they have to be either at break even or positive cash flow next year. And I said, well, that's a universe of 0 or 1, and 1, I think, walked out the door.
Somebody's on drugs.
So, I'll leave it, you tell me. I'd love to be able to see an activist model that goes out there and says to a hedge fund, to a private equity shop, to a VC, we're doing this because, and not after someone in that hedge fund, private equity firm or VC has already been stricken by something that, they're obviously trying to cure in the last 15 months.
I think that's going to be the only thing that would register with them. Everyone has quotas, everyone has a certain amount of revenue they bring in. Now, do you think you could, next year, we'll bring some of those hedge funds in and somehow bring them into a meeting for that type of communication? Seriously, I don't think they would be attentive to that. It's, what does it take? Maybe it makes the agitation or the, I shouldn't say agitation, but advocacy to strike at their market cap somehow, or at least in the public sector.
Advocacy needs better headlines. If you're going to be out there, you need a better headline. You've got to get out there and drive that headline again so that people might recognize the potential that there is money or could be money into something. I mean, I've got a couple of hedge fund managers whose son has got autism. I mean, this is a guy that's, just put in a 35,000-foot addition on his house, okay? He's looking for something in the autism area because this is his kid. But it's like, if he gets involved with some of these advocacy groups, he said, Henry, they just don't goddamn get it, quote, unquote. But the whole thing is, I think advocacy is important. I saw it work once. It's just a question of where's the headline and what will drive it, and the people that could drive it.
You made a statement about indication of a drug that came out, an HIV drug, which wasn't approved for HIV. So are you suggesting that the money men are behind that? Could you elaborate?
What do you mean? Originally, are we talking about the current HIV situation or the one that happened years back?
I believe you were talking about thalidomide.
Thalidomide was not being tested for multiple myeloma. It was Serendipity, pure and simple, that created that. At the time, people were desperate. They were literally dying, within 12 months of diagnosis. So what they did notice was that for the wasting that takes place for the virus, and also candidly for cancer cachexia, they noticed that patients weren't wasting as quickly as they were without the drug. So they noticed that there was something important in there. They just didn't know what it was. Then, the company went out there and said, okay, we don't know what we're going to market this for, but we know it's got a strong drug, and it's got the ability to do things. And at the end of the day, it's a matter of public record. A researcher by the name of Bart Barlogi out of the University of Arkansas happened to get a shipment of drug based on Judah Folkman up in Boston, who had the theory of anti-angiogenesis, and he tried it out on the first patient. First patient, unfortunately, didn't survive. It was a refractory multiple myeloma patient. 2 stem cell transplants didn't work. But the second patient went into complete remission. And that's when they understood that they had something. And candidly, that's the way you really typically do find scientific breakthrough. If you look at all the recreational drug, not that the drugs for not recreational use, but for quality of life improvement. You look at them, no one came up with this stuff that really works based on that indication. They were cardiac drugs, they were drugs, for hypertension, they were all different kinds of drugs. Then all of a sudden they noticed that they had some unintended positive consequence, and that's when the community came back and said, oh, by the way, here's what we're looking at. And, those are the more approaches you have, the greater the chance for serendipity to take place. And the idea is that I don't want to see a company spend $5 billion on one product. I want to see them spend $25 million on as many products as they can watch. And at the end of the day, you'll come up with not just a blockbuster, but a change in therapeutic application.
Just to get back to a little bit on the HIV side, okay, a sort of a funny story, but a crazy story, was I was the original investor in Gilead, okay? And I kept putting successively more money into it. And at one point, I was told that the chairman is in the office, and your job is on the line because you put so much money into Gilead. Boy, my job was on the line in '95, and look at Gilead now. Again, I believed in it. I really believed in what John Martin was saying, and look at it now. So there are times, it goes back to what Bernie said, that advocacy work. I mean, I thought I was getting fired anyway, so I mean, what the heck, But again, there's Gilead. So there are times if you have an advocate, it can work. It's not everything, but it's something. Anybody else? Thank you. Thank you all for coming. Thank you for participating. And thank you, Stephen.